How many times do you guys enter a trade, it stops you out when you take your entry, and then it ends up going in the correct direction as you expected? I see this happen a lot in the markets, and this is purely because your stop loss is either too tight or you're squeezing the trade. So in this video, we're going to clarify how to put the ideal stop loss when trading price action and where you should be looking to put your stop losses. Now, don't chase small stop losses, chase logical stop losses. Although it is a normal part of trading that sometimes, yes, you will get stopped out. That is why we have losses, but at the end of the day, we need to put our stop losses in the most logical place on the charts. Otherwise, you're going to get stopped out and your ideas are going to end up playing out, but your user error of putting a stop loss is going to be the mistake. So with that being said, let's get straight into the video. Welcome back, guys. Harry here, known as Trade Sharp, and in this video, as I said in the introduction, we're going to look at price action and stop placement. Now, this is a very important part of trading that I don't see much is covered on YouTube. There are some videos, but they're very basic and very, not really to the point, and they don't really help you in trading. And I want to talk because even if you're an advanced trader, when you get more as an advanced trader, what you try to do, I know that price shouldn't break this zone, so I'm going to move my stop loss even tighter. You get stopped out, trade plays out, and you're like, I should not have done that. So I want to talk about stop loss placement and how you can keep the tightest stop possible, but also allowing your trade to have some breathing room so that it can play out. So that's what we're going to do today, because refining your stop allows you to get better risk. And when you increase your lot sizes, then if you can put your stop loss in the best place possible, that allows you to risk as minimum pips as possible and allows you to target bigger places, that's going to obviously help your trading. So as always, guys, if you're new here, welcome to the channel. It's full of content. If you do like my content, I would appreciate you hitting that subscribe button. We're on the road to 10K. We're very close. So if you would support me in that, I would really appreciate it. If you have any comments, leave them down below. I read all of the comments and will reply to them. But if you want deeper discussion, you can join one of my groups down below and you can see my analysis. Also send your analysis and get feedback. So that is for free. That is in the description below. Also, I am posting some chart updates on Instagram, and I will be, so you can follow me there and have a look. So with all of that shilling out of the way, let's get into the video here. So when it comes to stop loss placement, it's a very situational based thing. So it all depends on the trade you're taking, and this is why many people struggle to show you how to place stops online. Now, the stop loss placement I am going to talk about is for price action trading here. So we're going to look at this and I'm going to explain how you're going to place a stop. So obviously, when we are trading, we're either going to take three types of trades. All right, so the three main trades. So either we're going to be in an uptrend, which is going to look like that. We're either going to be in downtrend, or we're going to be in some type of consolidation. All right, so these are the three scenarios where we should be looking to take trades. So let's have a look at an uptrend example here, right? So we're going to go in an uptrend example here. In an uptrend example, we're either going to take trades in two areas. We're either going to take it from the bottom to reach the top, or we're going to take it from the top here to reach the next high, right? So these are your options to be able to take the trades here, all right? And this is where people get messed up buying at these highs here, and I'm going to show you how this works. So to make this clear, we're going to label this here as trade option 1. So O1 is going to be option 1. So we're going to put option 1. So that is your option 1 right here. And then we're going to duplicate this. And then this is going to be our option 2, right? So we're just going to put as an option 2 here, right? So that's our option 2. We're going to delete this one up here. So your option 1, your option 2. Now it will work the same for a downtrend. So we'll only explain the uptrend scenario. Then we'll look at real life examples. So as an option 1, for this trend to break, right? So if we were to have an uptrend like this, for this trend to break, we needed to invalidate the lows here, right or wrong? So if you break the lows, the trend can end up changing to a downtrend, and that's where it will transition. So ideally, where should your stop be? Well, where is your idea wrong? Your idea wrong is if we're breaking these lows. So if you're taking trades from the option 1 area, looking to take a trade towards the upside here, your stop has to go a little bit below this zone here, because this is where it becomes wrong. Now, if there's a wick here on the candle like this, right? Let's say you look for a bullish closure, a bullish closing candle here, right? So we have one long wick like this from the bearish candle, and then a smaller bullish candle wick, and then that is the bullish candle like that. Your stop cannot go below the bullish candle wick. Why? Because price can easily break that wick but not break the previous candle wick, because this previous candle wick is the rejection wick, and I'll show you an example on the chart, the one I actually used in the introduction. So we can't break below that, and I'm going to show you how that makes sense here on the charts. If we look at this example here, say you take a position here where on an uptrend, for example, and just to make it simple, we're on an uptrend moving up here. We made a higher low, and you're looking, okay, we found support at the bottom of the range here. At the break of the highs, or as the candle opens, I want to take the trade. If you put your stop below this candle here, you would have got stopped out on the next candle, but your trade would have played out. Why is that? Well, because since we're creating support, ideally your stop should be below this low here, right? Your stop should below your stop should be below here. Why? Because if we break here, this is where you're essentially wrong. But we don't want to have such a wide stop, because as a beginner this would be a good idea to practice like this. But what do we know here? Well, how do we make our stops even better? Well, we know, okay, if we're rejecting this zone and closing a bullish candle here, we should not be able to close a bearish candle below the next candle, because then that most likely will bring us down to this point here, right? So if we're creating a support on lower time frames, this formation should look something like that. So if we're breaking this area here, means on lower time frame we're doing something like this, right? So this is what's happening on lower time frame, meaning we're breaking our actual structure, right? So putting it below the initial candle is a bad idea. Why? Because we could easily come back down like we did and then end up bullish. So keeping it a pip below to count spread, the previous candle of where we got the rejection is going to keep you safe, because anything in here you can have inconsistency. Now the lower time frame you go, the more inconsistency you're going to get. So if we were to rewind this so we can have a look somewhere here, we go to a 15-minute time frame, you can see exactly what happened, right? We came to the low, but we didn't close below. So what did this create? It created a higher low. Where was the initial support? The rejection came here when this closed bullish, so your stop needs to go below this candle here. This was a simple retest and then continuation, right? So this is how you enter on this. So you can keep a tight stop. Instead of keeping it below this low, you can keep it tighter, but make sure it's below the rejection candle. Now, this is where a lot of people get messed up. It's when they start taking option number 2. So option number 2 is when you start looking for trades here. And what most people do is when we get a breakout, right? So if you haven't watched my price action videos, this is going to be useless because you don't know how to trade price action. And you need to understand the entry confirmations and what we have. So for example, let's just take, because this is an example here on the chart, let's say you took this breakout here, okay? It's not the best example, but let's just say we took, actually, no, we have to find a good example here. So when you take breakouts to the upside, right, instead of taking a trade down here, you took the close above this resistance here. So you took the close above, great close above, and then you ended up putting your stop loss like this. Now in this scenario, it's good because we have structure, but sometimes we don't have structure. Sometimes we don't have this pullback here so that we can keep our stop loss below these lows. Sometimes it's just one candle here. Now there's a high chance that this next, not high chance, but there is a chance that the next candle can break the low and still continue. Why? Because you're not putting, see where the trade is wrong here, right? So if you're taking a trade, if price does this, let's say you take your entry here, your stop is somewhere here. If price does this, you're still right until we're breaking this low, right? Because this is just creating another high low, but it would have taken you out on your stops. Now you're stopped out, but the trade still continues. So if you're taking this option here, which is a continuation, you either wait for some type of structure to form, then break the highs, so then you can keep it below that structure, and that's how you're going to keep your stops tight. Or if you're looking to keep your stops below a candle, right, you need to be trading in times of volume. New York Open, London Open, not exactly the open time when the actual, like the 8 a.m., not on that candle, because that candle can pull back hard and stop you out, but around those times when you've been seeing volume come into the market, that is the time you want to be taking these continuation options, because you know, okay, if it is going to continue, but these are not trades you're looking to hold, this is a trade you're looking to get in and get out. So you're like, okay, I can keep my stop loss below the previous candle because it shouldn't break that if I'm going to use the volume to give me this push to my take profit, right? So that's the times where you can put it below the candle. Now, what about if the previous candle was like a 50 pip candle? What if we had a 50 pip candle? You can't put it before the previous candle, so you're going to go even more aggressive and use the current candle, right? So at this, I would recommend to see how that current candle has been formed. If you go to the lower time frame, 5 minute, 1 minute, and on the 1 minute you see in the current candle or in the previous candle, we had something like this and like this on the 1 minute, you know these are structure points. So what you can do is you can put it in between these structure points, not right below it, because as we saw on the 50 minutes, can still do this but not break it. This could be just wicks. So put it below that on the lower time frame, and you're essentially using the current candle stop loss, right? So as the previous, so we'll go draw all of this, and then I'll show you the range one. So let's remove drawings here. So as let's say we have a range here, so here's our support, and let's say our take profit is here. Price came up to the support here, boom, and then we got, and then we had, let's say, no, let me draw this again. So let's say we had one huge candle like this, and now we made a wick down, and now this price is now also coming here and breaking the high which closed which this candle closed above like this. So this candle closed above, and now we're breaking the high, continuing up. At this point, your entry is going to be here, right? So this is my point I'm trying to say. Your entry is going to be here, but your stop loss can't go below this candle because that's a stupid stop. That's too much, right? It's a very heavy stop, and it doesn't make sense. So what are you going to do? You're going to use the low, this candle low here, because you know, okay, with time of volume, when there's volume in the market, I am not going to put myself in the position for this to push up, break the high, come back down and break its own low, because most likely then it's going to come even deeper, and your entry, you know, you should be looking for entries in here, right? If you haven't entered in there. So at that point, what you're going to do is you're going to be smarter, and this is more advanced, and I won't show it in this video because I don't really want to get too complicated of how to use the lower time frames, but inside here will be lower time frame structure which you can use to your advantage to understand what is going on if this flips and where you can keep your stop. But this type of stop loss here, after we've seen a big move, if this is giving us the continuation of volume, if we're going to get the volume from this big candle into this candle, it shouldn't break its own low, because this is the rejection point that it's made, and this should be the support. So it shouldn't flip and break its own low. But again, the only time you use this type of stop loss is when you're trading with times of volume. I can't stress it enough. You can't be trading when price is doing slow, moving up like this, moving up. When price is doing this, you can't be taking these type of stop loss. Your stop loss has to be in solid places, below solid supports, right? So that is how you're going to use these type of stop losses, and we've covered the 3 types of stop losses in quite depth, and I think that should clear it up. And the last one to finish with this video is going to be the range. So let's say we have a range that's a really bad range. So let's say it's something like this, and then we come down, and now you're looking for price to make a breakout. Boom, oh, price broke out. Keeping your stop below, let's say this is the candle that closed above the range here, keeping your stop below this after a range is deadly, 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 deadly. We can easily come back and still continue, right? Because all that did is made a higher low significant to this low. Your stop needs to be minimum here, or as a beginner needs to be at the bottom of the range. And that's how you're going to trade ranges, because you're not wrong till it breaks this range. We see this a lot happen. Price will push up, give you a nice push towards the upside, come back down, break the lows, and then continue up. Sure, if we go into the charts, we can find a situation where we've had range, but it still plays out something like this. This is exactly the example I want to show you. Look at this. There's your range. Of course, we're looking for buys coming from bullish pressure, so you can call the bottom of the range here. All right, what happens? We get the closure, everyone goes for buys. Where do you put your stop? Previous candle low. Guess what happens in the next candle? Boom, comes back, heads up. Why? Because you can't be doing that at the top of the range. Where does you're not wrong here. This you have to forget. If all of this on the chart here was not there, right? Forget all of this. This is just a higher low. We're not breaking any structure. You're not wrong. So when you're trading a range breakout, I would rather not trade the initial breakout unless there's pure volume, or I would wait for this structure. Then I can just take the trade 3 pips more and then put my stop loss below this, and now I have a clear trade. But let's say you took this trade. If you took this trade here, your stop has to be all the way down here. Yes, it has to be all the way down here. Doesn't make sense, but yep, that's how you have to trade a range. Or if you're going more aggressive, put at least the 2 candles below here, below this area here. You see where we have this type of support here. At least you know, okay, if price can come down, reject the support, anything closing, I can close my trade early. And that's how you're going to use your advanced stop losses. And this is how you're going to place your stop losses. Now, I hope this video helped you guys. I think it's a very, very informative video with a lot of good information about placing stops, which is a very important part of trading that people don't understand. You can trade as much as you want, but if you're not placing your stops correctly, you can have accuracy of 100%, 90% win rate, but your win rate is cut by half because of your stop loss placement being wrong. So with that being said, don't chase small stop losses, chase logical stop losses. And that is going to be the message for today. Don't chase small stop losses, chase logical stop losses. And with that being said, take care, trade sharp, and until next time, peace.